Hey fellow stock guardians, happy Tuesday, August 3rd, 2021. I'm Hoda, StockCard CEO, reporting to you from a green stock market. Today, in addition to the usual look at the market indices, I covered SolarEdge's great earnings report and Robinhood's stock price rebound, and dug into gaming companies' criticism by Chinese officials and its effects on a few gaming stocks. Let's get into it. All three market indices ended in the green today. There wasn't a major story that could have moved the market. The treasury yield, earnings reports, and the number of new COVID cases are the typical market forces that came into play today. On the positive side, the 10-year treasury yield leveled out and there were quite a few positive earnings reports. However, the news of the new COVID Delta variant continues to worry investors. Before we dive into the stock analysis section, let me thank you for being a stock guardian. Our team at StockCard appreciates you watching, listening, and reading the Daily Roll episodes. And more importantly, we thank you for using the StockCard platform in your research. Thank you for being a stock guardian. If you aren't a user yet, I'd like to invite you to try now. First, hit the like button, subscribe to this show, and then create a free account on stockcard.io. Thanks for becoming a new stock guardian. On today's list of winners on StockCard, you'll find SolarEdge, ticker SEDG, up by 16%. While the company went through some supply chain issues, the CEO stated in today's earnings report that the company had the foresight to see these difficulties and managed to turn even more profit. SolarEdge beat forecast for revenue and earnings per share with an increase in revenue from $331 million to $480 million this quarter. Such a performance was cause for celebration, and investors welcomed the numbers by pushing the stock higher. Management also forecasts an increase to $520 to $540 million of revenue for the upcoming third quarter. This optimism attracted investors and gave it a push it needed to rise 16% by closing time. I own the stock, so I'm happy camper. The reason I held the stock despite some volatility in the past is apparent on the company's stock card. The solar power industry is growing rapidly and the company is profitable with solid cash. Also, folks, before we head to the loser stock, I want to revisit a big story quickly. Robinhood, ticker HOOD, had a rough IPO as we discussed a few days ago. Today, however, the stock closed up over 24%, reaching a price of $46.80. This is a rebound from the low hit of $33 per share. The stock price jump seems to be the courtesy of individual investors who are just warming up to the idea of being a Robinhood investor. CNBC says Hood was the most traded stock on Fidelity. Because Robinhood has at least 25% of its shares available for trading by individual investors, we should expect volatility. Also, it didn't hurt that Cathie Wood's funds, ARK Invest, started picking up shares as soon as the stock went public. It seems retail investors are pushing their favorite stock up, and I genuinely want to know why Cathie is investing in Hood and why she's not concerned about its revenue sustainability. On the loser side, if you've been following the situation overseas, you'll know that China is in the middle of quite the crackdown on some of its stocks like we have seen in the education industry, which we covered earlier. Today, a new industry is taking up a space on StockCard's losers list. Video game companies in China and the US took losses after the government heavily criticized the gaming industry over its effects on younger generation. Tencent TCEHY was one of the first companies to respond to the state's remarks, announcing that it would be taking action to keep younger players from spending so much time on one of its popular games, Honor of Kings, and eventually more titles. This will damage its revenue stream from gaming, and the stock price reflected this by falling over 7% by the close. Tencent also holds a 5% stake in gaming giant Activision Blizzard, ticker ATVI. This company has a large exposure to Chinese gaming industry through popular titles such as Call of Duty, World of Warcraft, Overwatch, etc. This relationship caused Activision's share price to drop by 3.5% today as well. NetEase, ticker NTES, is a rival entertainment company in China heavily involved in gaming as well. The government's criticism of video games caused NetEase's stock to slide almost 11.5% by the close. This is causing widespread losses, but one can assume that China won't destroy its lucrative industries. I'm wondering if the recent volatility in China may mean a good opportunity to buy an index fund or ETF that tracks China's growth. It is hard to target exactly which company is your best bet for buying the dip, but if overall China is beaten down now, it may mean a good chance to pick up some China-focused ETFs or closed-ended funds. Type in China in the search bar and China Fund ETF, ticker CHN, or MS China A-shares, ticker CAF, will appear. These may be worth watching if the situation begins to improve. I'm researching these for now, and I'll let you know what I decide at the end. Let's wrap up today by stopping by Janie Clay's portfolios on a StockCard's stock pick page. Janie Clay is founder of Wealthy Nurse Janie and the featured investor of the week. Janie runs 2 portfolios on a StockCard, her dividend and value portfolio and her high risk portfolio. I'm so impressed by her return, but also by her superwoman powers. She's a nurse, as you can guess from her name, a mom, an avid investor, and she's quite active on TikTok. I'll leave a link to my conversation with Janie in the show notes. I would highly recommend looking her up on the Stock Picks page and following her portfolios to get notified when she adds new stocks to her portfolios. That's it for today. If you haven't already done so, please give a StockCard a try, research as many stocks and ETFs as you want, and consider following a few successful investors like Janie by visiting the Stock Picks page on the StockCard platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. Like, subscribe, and share these daily market recap reports with your fellow investors. Come back tomorrow for another episode. I'll see you then.